Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market wrap-up for this Monday, the 7th of August, 2017. We're right now about 4:35 p.m. Central Daylight Time, so we've got all the settlement prices in before the boards erase themselves at 4:45. Another update in all the stock indices, some obviously going on to new highs for the move, others knocking right on the door. Slightly lower in both the crude and the gasoline, with the nat gas coming back after getting the 276. The problem nat gas is having is that at this point in time, there's really not a lot of hot weather out east or in the Midwest. We know that the West Coast has had its share, but that's not taking that additional oomph. They need a weather situation to get that market going. It's just not catching it at this point in time. When we take a look, and let me come to the charts there. When we come and take a look at the charts, this is the weekly bar chart on the S&P. I believe this uptrend line is quite valid at this point. It's got a lot of points of intersection, so that looks good. We can see the resistance point, and the market, I think you'd agree on a weekly basis, has suddenly gone fairly flat all of a sudden. That doesn't mean the bull trend is over by any stretch of the imagination. We are in the dog days of August. Let's not forget that where we're at. So you're getting lighter volume and other events taking place. Congress is broken, so we don't have any big news coming out of that. President Trump is out of the White House, so you're not going to get that. Of course, you'll get his normal tweets, but there's just not the same amount going on to make this market go into a fireworks situation. When we go to the daily bar chart, you can see how the market has got this consolidation. Again, consolidation doesn't mean uptrend or downtrend, just consolidating all these gains. It does have a swing line that's got higher lows and higher highs, so that is bullish. The market is trading over the 18-day average of closes. That is bullish. Today, the market saw a high of 24.78 and a quarter, which took out the other high of 24.77 and a quarter. So you have a higher high. So we've got the higher lows, higher highs. What that means is even if you broke through 24.63 and a quarter, you would not get a downtrend pattern of lower highs, lower lows. Can't happen. That means that the support against the 18-day average will probably be a little stronger than you would normally think. What is happening because of the flatness of the market is that the theoretical resistance, the upper Bollinger Band, and the higher bands are wrapping in the price right now. As they wrap in the price, this number is dropping, this 24.8375, and it'll probably drop again tonight a little bit as the market reopens and the resistance is coming down, whereas the support is moving up. Eventually, I'd like to see this market go and continue with that sideways action, because when you get that type of action the way you did here and there, it generally sets up a move, be it up or down. So that's what I'm hoping to see. In terms of momentum, you're overbought. You are not embedded. The market lost the embedded status if you look on Friday and Thursday. Can't get it back. It's now day one of being overbought. So that's all that I'm seeing there. In the NASDAQ, the uptrend's back alive. With today's action, you got the higher lows, the higher highs, over the 18-day average. Momentum is trying to turn up. You can almost see that red line making its move there, but it hasn't completely done it. Today's high in this market was 59.3775, which took out that high that I'm pointing at, the 59.24. So similar to the S&P, if you were to break down under 58.74, you cannot end up with that pattern of lower highs, lower lows right off the bat. Therefore, I think that the pros are buyers at this 5,900 level, and they'll try to defend it, not letting it get under 58.74. In the Dow Jones, you have a different situation. You've had this embedded stochastic. Now, what that means is the two numbers that make up stochastics, the red one's called the K, the blue the D, they typically bounce between 80 and 20. In very bullish markets, you don't get down too much to those 20 levels. We see that here. Then what happens often is the market will get up and have to decide, is it going to get overbought or lock in a bull trend? It locked in a bull trend, you went higher. Came up, lost the bull trend, had a break a couple of times, in fact, to the 18-day average, went back and re-embedded. Embedded means both numbers going sideways over 80, and from then on, the market just locked itself up against the upper Bollinger Band and hasn't given that up. Should the market take out 21,928, you'd lose the pattern of higher highs and higher lows, but until you lose the stochastic, the trend is up. In the in the Russell, the market has got a pattern that is oversold, went from an upper Bollinger Band to a lower Bollinger Band. This is obviously a weaker market than the other stock indices because they are not going in lower Bollinger Bands. Do you see that at this point? They're going to the higher bands. So it gives you an idea, and that's what I like about stochastics, as to this market being, how do I say this, more willing to advance, decline, and give you the swings in the market, whereas you're not getting that really in the other indices. You're getting advances, pauses, and this is the weaker because of that. It is in a downtrend. It's oversold. I don't see why anyone would be selling an oversold market because it's not even close to embedding. In the VIX, the market keeps running at the 18-day average of closes, narrowing in the two black bands. Now, what we've seen is that when the market gets prone for a good rally here, it goes up to that 100-day average and sort of fails. As it comes down, if it embeds, I know it doesn't look like it, but one of the things I tried to explain is when you get a number in a VIX that's at a historically low number, if it's at 9, and you get a move that is 0.5. I know it doesn't sound like a lot, but that's a 5% move for the day, and that is big. So you have to understand what to expect of it. Basically, what's happened in this market is the volatility is just plain come out of it, and that's what you have to deal with. In the September, and I know I'm talking out of both sides, you might say, because he's just said a 5% move. Well, when a 5% move doesn't amount to much, that's your problem. In the T-bonds, you've got the higher lows, higher highs. So we have an uptrend. I think what you're going to do in this market is mark time. We have at the end of the month, I got to get you the date, but it's around the 21st, I believe, of August, the symposium in Jackson Hole, Wyoming. That symposium for this month is going to be probably the big event. So I'd be looking at that, but this market has a bullish bias at this point. It's been working off an overbought condition, and formally it's no longer overbought because this reading's back under 70 in the K number. In the 10-year notes, the market has a reading in the red line still over 70, and the same in the blue. So you're still overbought, trying to walk back, if you will, the gains that the market just made, but it's holding on fairly well against the 18-day average, and both the bonds and the notes are in uptrends, although one's coming out of overbought, the other is still overbought. The dollar index lost its bearish embedded reading. Now, if we take a look at this, this was Friday's action. I'm thinking the market's going to get up to the 18-day average, and that's where the battleground will begin. Was this just a relief rally? Right now, what you have is a pattern of a lower low and a higher high going on towards that 18-day average. We'll see if it can get up there, and as it does, it's going to get rid of that oversold condition. It cannot re-embed like this until, at the earliest, it would be Thursday, maybe Friday, if it just fell apart. If the market wants to go up from here, it has to close over the 18-day average, and what that would do is, because today was what we call a down day, an inside day, you could then end up with the theoretically higher lows and a higher high over that 18-day average. But I think the first challenge of the 18-day average should offer some good resistance. In the euro currency, it's the flip-flop. We're getting the correction down in this. So now if it falls, it's the exact flip-flop. Get under the lows of Friday, and I'll be targeting the 18-day average of closes. In the Aussie dollar, the trend is down. The market is probably going to find willing sellers in the 79.19 area. Stops would be over the most recent high in the 79.70s, and they'll be trying to drive the market down to the lower Bollinger Band. Let's flip-flop this. and say that the market goes up through the 79.77. The problem is you cannot end up with the swing line pointing up. You're going to have a lower low and then a higher high. And in addition, no matter what happens, momentum's pointing down, you'd have divergence. So the bears, I think, have control of this market in the meantime. The yen is at that funny position. It lost its embedded reading, but it hit the 100-day average. The closest of these two numbers is what I look at to see if the market's going to hit an objective and possibly bounce away. I think we're right at that point where this market is dangerous. The bulls have given up an awful lot of control here. They need it to just pop and go. Otherwise, I think that they've got a losing position on their hands. In the crude oil market, you can see both numbers are right now here over 80. So today, both over 80. Were they both over 80 the day before? They were. What about the day before? No. So we have 2 days where both numbers are over 80. All that means is you're overbought. Tomorrow's a very important day. It's also turnaround Tuesday, so a lot of markets that were down today are up tomorrow. We get that type of feel. If the market were to get out up and over 49.96, you'd still have a lower low and a higher high pattern. So it's hard to get excited there, but remember, I think the most important tool on the chart is the embedded reading. In the gasoline, you lost the embedded reading, and that often means price in the 18-day average make a run at each other. That's what I think we're doing right now. In the nat gas, you've been in a downtrend that is oversold, not embedded, so I'd be a bit cautious. If you take a look, today's action, both numbers under 20. They were both under 20 on Friday, but not the day before. So that's why I'm going to say I think that tomorrow's going to be an interesting day looking at how all this plays out in the energy complex. As you can see, they're getting ready to erase the boards. Not everything erases, by the way. Some of the stuff that trades off of ICE doesn't erase. That just reopens. They clear the board right before it. I want to remind you about Linn research because it's so important right now. You're going to get these grain reports. Cattle today was just about limit down. This is not where you're going to find the big moves, in my opinion, in the currency markets, the bond markets, or even the metals right now. I think those moves are going to come, the bigger moves in the agriculture sector because of the time frame, where we're at in the summer. In beef, for example, they put an awful lot of beef into the feedlots because the pasture land got so dry. Is there too much? What's it weighing on the market? In the grains, what about the moisture? Is there enough? Not enough. We got an east-west line this year. Everything west of the Mississippi could be problematic. East, okay. You got to watch that. So what do we get? We get out of that not only our research from Linn, but you get this, Modern Trader magazine. Now let me talk about Modern Trader, because what you should do is sign up for both. The magazine itself comes out once a month, so it can't deal with the day-to-day issues. We can. But Modern Trader also puts out Daily Market Focus that deals with a lot of the issues you might want to know about. I think they don't deal enough in the grains at this time of the year, so we add to that for you. The combination, pretty powerful. This is a $79 subscription, free from us. You get it by email, not by print, comes right away. It's got a new built-in reader. It's slick as can be. It comes from the company Zeno. You're going to love how it looks, how it opens. It's like a great magazine to read that way, and of course it prints. So how do you get this free value? Just go to our website at www.iraepstein.com. You can call us at 866-973-2077. In addition, you can always click up here. If you're watching me on YouTube, you're going to see an icon. And underneath us on a number of websites, it says, click here for Ira's free information. Do so. We'll get this in your hands. The new issue should be coming out every day. We'll show you what it's going to look like, so we're waiting on that ourselves. Take care. I'm Ira Epstein.